Okay, we're going to get started. Thank you for joining us this afternoon on the prevailing wage basics topic. We have a lot of good information, I think, to share with you today, and hopefully you find that it's very beneficial. I am Marie Marks, and I am with Sikich. We are hosting this webinar for you today. And Todd, if you want to move to the second slide. So Sikich does retirement plan services. Some of you may know that, many of you may not, but we build and retain strong competitive workforce for you. That is the biggest thing we're seeing right now, that if you don't have a really strong competitive workforce, it makes it difficult to attract and retain people, especially in your sector of the markets right now. And with that, we also provide the behind the scenes. We do everything that you need to make sure your plan is in place. What we like to do is sit down and find out what is the things that you most need and then structure it around. So everything is customized and geared toward each individual company and plan that we work for. Use me as a resource if you have questions, even if you have a plan and you're just not sure about something. Please feel free to reach out to me, and I'd be happy to help you and answer anything for you. We have Todd Kickle, who is an expert. He is with Beneco. He is the East Coast sales consultant, and he is one of the experts in this field, which is why we wanted to bring him to you today. With that, I'm going to turn it over to Todd. There is a chat thing box on the side, so if you have questions as we go along, just put them in there. We may get to them as we go along. We may hold them for the end, depending on the sequencing or timing. And then there are also handouts. You'll see a thing on the side, and it says handouts. There are 5 handouts for you that you can download at any time during this presentation. With that, I'll turn it over to Todd.
Perfect. Well, thanks, Marie. Thank you for having me. I want to thank Sikich, who is a partner with Beneco, for sponsoring this event, as well as everyone at the ABC organization. Much appreciate you taking the time to join us today. Typically, I would be doing this in person, which is what I much rather prefer out there in the great state of Indiana. But unfortunately, based on our circumstances over the last few months, I'm doing this remotely. So what I'd like to do real quick, if we can start off with a poll, just so I can get a little bit of an idea of who my audience is today, is what percentage of prevailing wage work are you currently doing today? I wait here for a moment while that comes up and give you a few seconds to answer. All right. And the results, about 40%, roughly 25 to 50%. We had 20% in the 0 to 25 and then 20% in 75 or more. So pretty consistent with what we typically see at Beneco. I would say our average client is right in that mid 50%, 40, 50, 60% range. So appreciate you taking the time to fill that out for me. What we will be discussing today is a agenda that will typically go over real quickly who is Beneco, what it is we do. I know Marie had a chance to mention Sikich, one of our partners. We'll touch a little bit on the Davis-Bacon Act, who and when does it apply. We'll review wage determination sheets and talk a little bit more around fringe dollars. And then we'll close with a little bit on certified payroll, an area where we typically get a lot of questions, as well as overtime calculations. And at that point, we'll open it up for Q&A. As Marie mentioned, feel free to send questions you have within the chat box. Either Marie can interrupt me as they come through, or we can address them all at the end of the presentation. So once again, thank you for taking the time to be with us today. So who is Beneco? Beneco is a trusted name in contractor benefits. We've been in this space now for over 30 plus years with clients across the United States. We are one of the largest providers of group retirement and benefit solutions, working exclusively with contractors. I would be remiss if I didn't mention there, in the bottom right corner, you'll see future plan by Ascensus. We were acquired by Ascensus out of Dresher, PA, back in August of 2019. For those of you that are not familiar with Ascensus, Ascensus is the largest independent record keeper of retirement and college saving plans here in the United States. Beneco falls under its future plan umbrella, which is the largest independent third-party administrator in the United States. So we were brought into that umbrella based on our specialty within the construction or contractor industry. What is it that we offer at Beneco? We offer our services that include record keeping, third-party administrations, and benefit consulting. We have all types of solutions that we can focus on to make sure that we're fully taking advantage of the fringe dollars that are available. We'll start with retirement. We have a 401k product. And as Marie mentioned, we also have some open architecture that we can work with at the Sikich side of the business. We have life insurance benefits. We have ancillary benefits as well as human resources. On the ancillary benefits, think your traditional medical, dental, vision, long-term disability, short-term disability, etc. We can help you in all of those areas. That being said, because we're the experts within the construction space, all of our solutions are built to accept fringe dollars, and we'll get into a little bit more about what that entails. So what exactly is the Davis-Bacon Act? The Davis-Bacon Act is the federal law that requires contractors and subcontractors to pay at least the local prevailing wages. These are subject to federally funded projects as well as state and locally funded projects where applicable. If you can see at the map below, Indiana and Kentucky both repealed their prevailing wage laws. So Indiana in 2015 and Kentucky in 2017. So you do not have state-specific prevailing wage laws, but that being said, you still would fall under the federal Davis-Bacon Act when federal dollars are input into the project. What exactly is that number? It is $2,000. So federal prevailing wage laws will apply on all federally funded construction contracts in excess of $2,000, regardless if there's a state law in place or not. So if there's a new highway built, if there's a new federal building being built, or anything under those kind of in that category taking place in Indiana with 2,000 or more, you would fall under the Davis-Bacon Act and be subject to all of their regulations. As we mentioned, some state and locally funded projects based on the states in Indiana and Kentucky, we do not have that currently in place. Who else would fall under prevailing wage laws? Service Contract Act could also, who would that be? So think service contract is the support or service industry. So not actually building or using their hands or mechanics, but more in line with security, say a landscaping crew at the federal building in downtown. Those would be falling under the Service Contract Act and would also have to apply prevailing wage. So who does the prevailing wage laws apply to and who do they not apply to? Laborers and mechanics on qualifying projects whose duties are manual or physical in labor, or in nature, I should say, absolutely would be subject to prevailing wage. The site of work is defined in the DOL prevailing wage resource book, but for most people and in most cases for Davis-Bacon Act, site of work is where the project is to take place. So when you're filling out your bids for the federal project, it'll say for a library or for a federal building at this location. That location is the site of work. Anything done off-site, prefabbed, or anything miles away from where the site of work is would not fall under the preview of DOL prevailing wage resource book. So the site of work is actually where the job is taking place and only where the job is taking place. If they had a batch plant adjacent to that site, that would qualify for the workers there, but anything outside of that does not fall under prevailing wage. Who is exempt? Owners, administrative employees, and truck drivers. And in most cases, some states are not changing the rules around truck drivers, but if they are simply bringing materials to the site, they would not fall under prevailing wage. So what exactly is a wage determination sheet, and how do we figure out what we're going to pay our employees if they are on one of these federal Davis-Bacon jobs? So what is a wage determination? It's the regulation that establishes the prevailing wage and fringe benefit for a work class in a geographic area. Where do you find determinations online? Right there's the website, beta.sam.gov. There's a ton of great information on that website, but you can literally go in, search under state. So Indiana, pick out the county. Once you pick out the county, it'll give you a list of all the different job classifications and what the rates would be from county to county. They will vary. What I've seen in a lot of areas is obviously closer to major cities, you tend to see higher wage determination sheets simply because the cost of living tends to be a little bit higher in those counties than when you get further out from the major metropolitan areas. So they will vary based on geographical location. How are the rates determined? That's a question I get quite a bit. In most cases, what will happen is the DOL will send out a survey to all contractors in a particular county. They will also send it to the local labor unions. And what will happen is they'll take a bunch of these surveys back in, average them out, and whatever the average rate in that particular county is becomes the prevailing wage for that county. Key things to remember when looking at a wage determination sheet: there can be significant differences between regions. One example I always give when people say, well, explain to me exactly. I mentioned before the cost of living in different metropolitan areas versus a little bit out more in the rural areas. But think of putting a highway in. And if you're building a highway and sometimes they cross county lines, you could actually have different rates between different counties that you need to pay the workers on depending on what part of the road they're working on. Other things to remember is you could have one or multiple wage determinations assigned to one project, as I just mentioned. Think of a highway going between counties. The one thing, and I just actually got a question from a lady that was on one of my presentations last week. She was wanting to know what happened, that they've been increasing their prevailing wage as they have updates to the wage determination sheet. So let's think we're beginning a job in October, November of 2019, and on January 1, the new rate wage determination sheet comes out. Do I need to update my payroll to the new wage determination? The answer is no, not under the Davis-Bacon Act. Once it is assigned, it stays in effect for the duration of the project. So a question we get a lot, but one to remember that once the wage determination is assigned, and there's a couple variances to that. For some reason, if the job doesn't start on time, they can potentially give you some time to update it. But typically, once the rate is assigned, that is the rate for that particular job. Here's an example. So I looked in the Fort Wayne area at some of the counties. So Adams, Allen, DeKalb, Huntington, Noble. These would be the rates, and I just picked one of them that I saw off of sam.beta.gov, and that was for the bricklayer, stonemason. So we'll use them as the example. Your base rate based on this wage determination example would be $30.37. And it would come alongside with that with $16.23 in fringe benefits. We're going to get into a little bit deeper conversation here further on about the difference between the base rate and the fringe rate. But one thing I do want to mention that this wage determination sheet does not show is that you'll see in some cases where the fringes are actually broken out. In this case, let's say we'll use the 1623, and I'll make math simple for myself. It'll say $6.23 has to be used for medical, $5 for 401k, $3 for an HRA, and $2 for short-term disability. That is just a guideline based on the surveys that they received back. The people that filled out the survey, that is how they are distributing their fringe dollars. So it's just a guidepost. As long as you pay the base rate and the fringe rate combined, in this case, doing quick math, where we got 46.60 would be what you'd need to pay to be compliant. Any combination of the base rate and the fringe will keep you in compliance with the DOL. So you could technically offer $25 in base pay and put the remaining into benefits if you would like. So that's another thing that we come across a lot and get a lot of questions on is, do I have to follow wage determination to a T? The answer is no. What you do need to do is make sure that whatever the wage determination says, as far as the rate and fringe is combined, that is what you're paying your employees in the field on that particular job. That'll keep you compliant. And before we jump into the 4 legal uses of fringe dollars, I was going to go to our second poll here to see what we just talked about. What percentage of you are paying the fringe in cash right now versus using cash for cash and benefits, and then finally using 100% of the fringe dollars to pay into benefits? I will pause for a minute as we fill out the survey. I think the results should be coming in here. Perfect. It looks like about 25% are paying in cash, 25% use 100% of the fringe, which is great, and about 50% use a combination of cash and benefits, which is what we typically see today in today's market, is wanting to get some of that cash in the hands of the employees, but utilizing some of it obviously for fringe benefits. And I'll explain why that becomes important here in a brief minute. So what exactly, and thank you for taking the time to fill that out for us. So what exactly are the 4 legal uses of fringe dollars? Well, we touched on briefly earlier as Beneco's lineup of solutions, but pension and retirement is the first one. Think 401k, health and welfare ancillary benefits, your major medical, dental, vision, as we mentioned before, insurance products, as well as disability, etc. Qualified approved apprenticeship programs. The good news is we can set some of that money aside using a lot of our local ABC chapters that have approved apprenticeship programs. Indiana, because we do not have state prevailing wage law, does not require it. Some states will actually require a portion of every fringe dollar to go into an approved apprenticeship program for training. And then the last option that we have of the 4 legal uses for fringe is vacation and holiday. I will pause here for a moment because the one thing with vacation and holiday, and we'll get into the tax consequences here in the next few slides, vacation and holiday is a way to take credit for the fringe, but as we pay it back out into the paycheck, it does become taxable. So it's a temporary way to take a tax reprieve from the fringe dollars going through the paycheck is by putting it into vacation and holiday, which is also a solution that we offer at Beneco. So before we get into those equations, understanding fringe benefits, what is exactly a fringe benefit? Well, we just went through it a little bit earlier, but it's under the Davis-Bacon Act, the term wages, scale wages, and prevailing wages that include the base hourly rate of pay and any combination made to a trustee or third party pursuant to a bona fide fringe benefit fund, plan, or program. So again, what we just mentioned before, paying it through wage or through a benefit program that goes through a bona fide fringe benefit. And the methods of doing that are exactly what we just talked about, cash wages or a fringe benefit to the covered employees. Now, a word that was used here twice is bona fide benefit. So what exactly is a bona fide trust? Again, there's the location, the DOL book, that if we had some free time and wanted to put ourselves to sleep, we could read and get a little bit more on what exactly a bona fide trust is. But there's really 3 key criteria that you need to make sure you're following when implementing these programs. One is that the fringe benefits must be made to a trustee and or third person irrevocably. The key with Davis-Bacon and staying compliant with the DOL is that, as we talked before on that determination sheet, the base wage and fringe combined needs to go to the benefit of the employee. How do we keep our contractors compliant? Well, if we keep that money off of their operating budget and put it immediately into an irrevocable trust for the benefit of the employees, a lot of that confusion goes away, and there's not an opportunity for that money to be spent on projects or things that it wasn't initially intended for. So that's the first requirement of a bona fide trust. It needs to be set up with a trustee and made contributions irrevocable. The third person that we use as our trustee must not be affiliated with the contractor or subcontractor, and that's simply just to eliminate any conflicts of interest. And then finally, the fiduciary responsibility of a trustee must be found and applied based on applicable laws, meaning they have to follow and be a true fiduciary for the employees that they're representing. So now here we can dig a little bit deeper into what I was mentioning earlier on what exactly is the base wage and fringe benefits, and what was I talking about when I mentioned saving some of that labor burden or taxes. We at Beneco call labor burden a roughly 30% addition onto your wages. So again, prevailing wage is combined of 2 parts, the base and the fringe, and then we have to pay taxes on top of that. So the taxes include your FICA, your federal unemployment, state unemployment, workers' comp, and general liability premiums will also go up with an increase in payroll. So it's a benefit not only for us to avoid the taxes, but also to lower our workers' comp and general liability premiums by utilizing those fringe dollars into a benefit versus paying them out in cash. What does this look like? Well, let's look at an example. Paid on a check, we'll use an example here of a $30 base wage and a $20 fringe benefit for a total of $50. As I mentioned, labor burden around 30%. If we had $50 was all being paid in the paycheck, we'd have to apply that 30% on top of that $50. We'd have an additional labor burden of $15 per hour, or a total of $65 an hour in total labor cost, which tells me 2 things. One, that's the cost we should have bid on the job, which in a lot of cases I've come across people that say, I don't make any money on prevailing wage. A lot of it is because they didn't figure in the labor burden, the taxes that would be due on the full dollar amount. But more importantly, and we'll see in the next example, is this is what traditionally a lot of people will bid on their contract is a full bid, meaning I put everything in the paycheck. But if we used a bona fide trust to do the benefits, we can see below that we can save ourselves $6 of that 15 in labor burden. Why? Because we can't avoid the $30 on the base wage that's still going to hit the paycheck, which would be $9, but we can avoid the $6 on the $20 in fringe benefits. What does that do? It lowers our overall bid cost now to $59 an hour in total labor. So not only are we going to be able to bid lower, so anytime we're going up against somebody, as we saw those results, right? One is paying 100% out in cash. They're going to have the higher bid price, or at least they need to go with a higher bid price. The one using 100% in benefits is going to have some flexibility to come in anywhere below $65 an hour and have an opportunity to win that bid. So it's important that if we're looking to win new business within Davis-Bacon, that we're also not only lowering our overall operating costs in our tax bill, but giving us an opportunity to bid lower and win more business. We'll take these examples a step further with an example. So again, we mentioned $6 an hour in labor burden savings per employee. And let's assume we were one of those typical companies, as we mentioned, that works about 50% in prevailing wage. We typically will look at a 2,080 hour work year. So if we're doing 50% in prevailing wage, that would tell me that we're doing roughly 1,040 hours in prevailing wage work. Times that $6 an hour would give us a grand total of $6,240 per year in operating cost savings by just utilizing those fringe dollars instead of putting them through the paycheck. If we had 25 field employees, that would be over $156,000 in operating cost savings in 1 year. So quite significant. Take that a step further. That fringe dollar amount of $20 per hour, using that same 1,040 hours or 50% of a year in prevailing wage, gives us $20,800 a year to provide benefits for our employees. Times 25 field employees, that's over $520,000 to be utilized for benefits. We at Beneco call that free money that you're awarded by winning these bids. That's exactly what it is, money to pay benefits for your employees by winning these bids. So it can be quite substantial. I did see one of those that were close to 100% in prevailing wage. That would be over $1 million to provide benefits. Not only that, we'd have over $300,000 in operating cost savings. And one of the examples I always use when we're talking there is that we could use that $300,000 in operating savings to pay for benefits for our administrative and home office staff, while still providing the same benefits for our field employees at no additional cost to the owner. So it's a huge benefit to properly utilize these fringe dollars for multiple reasons. Matter of fact, here they are. And we've talked about most of them as we've gone through this presentation. But first, avoid those payroll taxes on every fringe dollar paid into the trust. Take care of your team. Offer your team the benefits that they're looking for. A couple little statistics when it comes to the contractor and construction industry. Over 2/3 of contractors do not have access to an employee-sponsored retirement plan. Yet it's one of the #1 things that they request when looking for a new employer. And also, out of the most dangerous occupations out there, 18 out of the top 20 are in construction, yet only 50% of contractors have access to healthcare from their employer. So it's another thing that really, when we talk to the individual employees, that they're truly looking for. The last aspect there is that, second to last, I should say, is attract and retain key talent. I don't think it's a secret to anybody out in the room today that contractors are struggling to get qualified, talented laborers to work on their projects. As a matter of fact, I know 40% of projects aren't even getting bid on because they don't have enough labor to go out and bid on additional projects. 70% of projects that are underway are behind schedule, again, due to a lack of labor. So really to attract and retain key clients to keep them from jumping ship, this is another great way through adding benefits. And finally, as we talked, when we went from $65 an hour to $59, it gives you the opportunity to win a lot more bids moving forward. Before I jump into the last slide, or last few slides, I should say, which will go over a few of the products, and then we'll touch on certified payroll as well as the overtime question. We have our final poll. As I mentioned before, 2/3 of contractors typically do not have access to an employer-sponsored retirement plan. So I'd love to see from our audience today, are you offering some type of employer-sponsored retirement plan? And if so, what is it? Is it a simple IRA? Is it a 401k? And again, we'll pause for a few seconds here while that poll comes up and gets answered. All right, and the results. It looks like about 25% offer a 401k, 25% in the simple, and about 50% do not offer a retirement program within the program. So fairly typical of what we see out there. The simple plans are one I know that people utilize a lot in the beginning as they're growing their businesses. I will tell you that it has some limitations when we get down to wanting to put bigger contributions away. So if we do win more prevailing wage work and have more fringe dollars, as we mentioned, the one thing I also haven't stressed yet is that the fringe benefits are an employer contribution, not an employee contribution. Even though it's their money, it's considered an employer contribution. So we can put up to $57,000 away in a 401k versus an individual without being below 50 can only put $19,500 away. So another huge benefit of the 401k over the simple. Simple plans are great. The only other downside is it forces to make an equal contribution to everybody in the program. But a great way, I much rather see simple plans than nothing in place for our contractor clients. So let's jump into some of the solutions I mentioned. What are some of the benefits with Beneco? Well, the Beneco retirement plan is 3 plans in one. It's your 401k for all employees. It's a prevailing wage plan for the fringe dollars, as well as a discretionary profit sharing plan. One of the things I tend to see when I travel with my contractor clients is they didn't do any prevailing wage work when they first started business. So they opened up a traditional 401k and would let employees opt in if they would like to save for retirement. And then one day came along where they actually decided to bid on some prevailing wage work, and they contacted their current 401k and realized that the plan wasn't designed to accept prevailing wage dollars. So in most cases, what they would do is open a second 401k solely for prevailing wage. And then unfortunately, what you have there is double the administrative burden. So whoever in human resources or in the administrative side of the business is now responsible for 2 plans and maintaining them, as well as now you have twice as much in cost. So one of the huge benefits of working with Beneco and making sure the plan is designed properly is that, like the simple, we can make profit sharing contributions to all employees if we've had a good year, but we can accept the prevailing wage dollars as well as traditional 401k contributions from the employees. So it's a huge benefit to lower the administrative burden and have the cost of only 1 plan in place with Beneco. On the health and welfare front, we've touched on this briefly. A couple of things that I want to mention that is unique to the industry. I've been in financial services now for well over 25 years and had not seen it until I joined Beneco and learned more on prevailing wage, is an hour banking solution. Hour banking in Indiana and Kentucky, like Ohio, although not as much in Kentucky because it's a little bit warmer the further south we go, but we have a lot of seasonality. And what I mean by that is we tend to have workers not doing much work in January and February, which makes it difficult then if we put a major medical program into place to continue to pay that through the operating budget. What hour banking allows us to do is to take a portion of those fringe dollars while they're working on a Davis-Bacon project and set them aside for when they might not be working on a Davis-Bacon project or for when they might need to be laid off in January, February, and can pay for the full cost of medical at that particular time. So it gives us the advantage of setting $1 or $2 an hour aside. We can keep up to 4 months of premiums in an hour bank. So it's another huge benefit for being able to pay for major medical is by utilizing the hour bank. And again, that's very unique to the contractor industry and something that comes with Beneco when offering a major medical to your employees. It's something that is included in the services that we provide. As we talked also, you have dental and vision, life and disability. I will mention the health reimbursement accounts. We have seen a lot of those utilized as well. As we mentioned for that example of using $20 in fringe, we can have a substantial amount of money that we need to put aside. In that one example, when we did 50% I believe it was roughly $20,000 per employee that we'd have available for benefits. So let's say major medical is 5,000 or 5,500 a month times 12 months, that'd be 6,000. We'd still have $14,000 left. We could hour bank some of that to pay for premiums when they're not working, which would still be a total of 6,000. We can add in an HRA that will cover their deductibles, which are typically anywhere from 2 to 4. We'll use the 4 example, and that still leaves us $10,000 left where we can fund a retirement program. So a lot of different options when it comes to utilizing the Fringe with Beneco and Sikich. Another thing I tend to want to focus on when talking with contractors is leveling wage disparity. As we mentioned, in most cases we saw, I think the majority were between 25 and 50% in the prevailing wage space. And one of the things I've heard from a lot of contractors is the conversation around the water cooler on any given Friday when the paycheck comes out, is that private jobs tend to unfortunately not quite pay the same base wage or fringe amount total as those public jobs do. Public jobs tend to be a little bit more lucrative for not only the business owners, but as well for the particular employees on those jobs. So obviously it's something that a lot of people are gunning to say, I want to be on the next prevailing wage job if I have an opportunity to do so. One of the things I mentioned to kind of take away that confrontation or that conversation around the water cooler on a Friday when paychecks come out is to pay all employees the same base wage, regardless if they're on a public job or a private job. So let's use that example of 30 bucks. Everyone makes $30 an hour, regardless if you're working a private or a Davis-Bacon job. The big difference would be if you're on the Davis-Bacon job, you get an extra 20 bucks in benefits. So you're gonna have a little bit more of a richer 401k, a little bit better maybe medical coverage, if not at all medical coverage. But you will not have a difference in paycheck when it comes to Friday and you're looking at your end result for the week. So it's one thing that I recommend to a lot of my contractor clients to think about doing to level that wage disparity. Most companies do some combination of both private and public, so it's a great way to eliminate that. And again, it eliminates that conflict that you tend to see sometimes between employees and management. So finally, the last two topics, certified payroll and the overtime question. Let's see where we are in time. We got perfect. We're just about 35 minutes into it, so I appreciate everyone's patience. What is certified payroll? Well, certified payroll is that special report that must be filed on a weekly basis if you're doing a Davis-Bacon Act. The certified payroll is a report of what actually happened that payroll week. One of the things I hear or see from a lot of people is that they forgot an hour or two and they just add it into next week's certified payroll. That'll get you in trouble with the regulators. They do not like that. They would prefer you go back and modify last week's certified payroll and add in the missing hours versus trying to make the correction on this week's payroll. So that is one key. What is included on the certified payroll? And we'll look at an example here in a few seconds. You're going to see the name of the employee, their ID, usually it's their 4-digit last 4 of their social security or some way of identifying your employees, hours worked on the project, class, pay, fringe, deductions, etc. So here's an example of what one would look like. This is the U.S. Department of Labor. So in Indiana, since we do not have a state prevailing wage, this is the certified payroll form you would utilize. Across the top, we would see the name of the contractor, the address, and then we'd see the project location and number. So right there, just a sample project for demonstration and the contract number. This particular example is for week 1 of certified payroll. So it's for the week ending June 29th of 2020. What we would do then is backdate the certified payroll. So you can see start with Sunday at the 23rd and run through Saturday the 29th, which is the week ending period for this payroll. We would list our individual laborers. In this case, we'll run through one of them. I do offer a certified payroll seminar as well, and it is something we get a lot of questions on. So any questions you may have, please again utilize the chat box and we can address them afterward, or we can have a conversation after this webinar. But we'll use Jane Doe in our example today. Jane is a pipe fitter. She worked on a prevailing wage job Monday, Tuesday, and Wednesday for a total of 8 hours each day. Under the rate of pay, you'll see she was her wage determination is for $18 an hour. There was no fringe, so that was everything was included in the base with that 18 was the fringe and the base wage. That's a total gross earnings, if you take 18 times 24, of $432. We would then put down the taxes. To keep math simple, I just put down 10 for FICA, 10 for all the other withholdings, 10 for state, 10 for city. There is an other in Jane's particular situation, which we will see on the back of this certified payroll, which a total of $50 in deductions. Subtract that from the 432 and you'll see the net wages we need to pay Jane Doe. The only other differences in the examples below would be one of them has some overtime, and you can see if we were paying fringe versus in the paycheck that the base and fringe wages would be kept separately. On the back of the certified payroll, this is the key. This is where we're letting the government and the DOL know that yes, we did pay out the wages that were on the wage determination sheet to be compliant with your regulations. In this case, Alex, the boss, is the president of ABC Contractors. Again, the date would be 6/29. We would fill out the beginning of the week, the 23rd through the 29th. Here we can see other deductions, which is Jane Doe borrowed a loan from the owner of the business to buy some tools that she wanted for her own personal use. He is able to deduct that back out of the payroll. We can see the two key boxes when it comes to certified payroll. Box checked A, which is where fringe benefits are paid to approved plans, funds, or programs, which would be through a bona fide trust, or box B, where fringe benefits are paid in cash. In this case, they're both checked. What I typically recommend for my contractor clients is to check the predominant box. And what do I mean by that? Let's use that $20 again in fringe as an example. If we're paying 15 in cash and 5 in a benefit, I would check box B because we're paying more out in cash than we are in benefit, and vice versa. If we're paying 15 in a benefit and 5 in cash, I would typically check box A. The key is at the very bottom there in the lower right corner, as Alex, the boss, has to sign off on that, and he is signing that he has paid his employees the wage determination prevailing wage rates for that particular project for that particular week. So I know there's a lot there, and again, if you have questions, please utilize the chat, or we can talk offline after this. I will give you my phone number, Marie's phone number, and our emails as well at the end. So how can you help yourself when it comes to certified payroll? First things first, make sure your accounting department recognizes that the regulations are real and they must be complied with. So thinking that, hey, you know what, they're not going to notice the difference. They are real, and they definitely will come after you if we're not following our certified payrolls as required by Davis-Bacon. Other ways to help yourself, we at Beneco work with a lot of partners that have software that will set you up for success when it comes to certified payroll. That'll actually download the wage determination sheets for your particular job right into the system, so they can link it together with your payroll. So it can be almost seamless when it comes to generating that certified payroll for you. So if you have interest or would like to know more about some of the partners that we work with, or who is out there in your neck of the woods that might be able to help with certified payroll, please don't hesitate to ask. And one thing you'll notice at the bottom is the red flag. 19%, believe it or not, of all certified payrolls have at least one error. So again, it's not uncommon to have an error. Just make sure that we go back when we catch it and adjust it on the previous certified payrolls where that error occurred, and that'll get us back into compliance. We would rather correct those errors and be compliant than wait for the DOL or for someone else to find us not to be compliant. So a few questions when it comes to payroll and certified payroll. How often do I need to submit certified payroll? Well, we mentioned it earlier. It has to be done by Davis-Bacon on a weekly basis. So again, how often do I need to process payroll? Well, if we're filing certified payroll on a weekly basis, those employees on a Davis-Bacon Act project have to be paid out weekly. And then last but not least, who can submit a certified payroll? Anyone in the office can submit the certified payroll to the DOL. Like I said, it takes a little bit of training and getting used to this form, but once we're used to it, we can submit it. And then through using some of those partners, like I mentioned, a lot of it can be done electronically and signed off through an electronic signature. So it really can be streamlined for you. Now into the last part before we open it up for Q&A is overtime calculations. Overtime must be paid, as we all know, on all hours worked over 40 in any given work week. The base rate is the basis for which overtime is calculated. What do I mean by that? And we have an example below, but the overtime rate must be 150% of the base rate. You do have to pay out the fringe, but the fringe stays consistent. So in the example below, if you had a base rate of $20 an hour and a fringe rate of $5 an hour, and we worked overtime, that overtime first hour would be at $30 an hour, but the fringe would stay consistent at $5. There are a handful of states, if you do any business outside of Indiana or Kentucky, two examples I can think of off the top of my head are Pennsylvania and Massachusetts. If you actually pay the fringe in cash, that also now figures into the time and a half rate. But that's, again, in a small handful of states. In Indiana, Kentucky, if doing Davis-Bacon, the fringe would stay consistent. You would only need to do 150% of the base rate on those base rate hourly payouts. So in this case, the $20. Again, an area I get a lot of questions. So if you have any other questions you'd like to add or more clarity there, please, again, utilize that chat box. So some final FAQs. We pay bi-weekly, Todd. How do we prepare our certified payroll? Well, you still need to pay it weekly, and that's why I always recommend to contractors to utilize a weekly payroll system. It will really help to enhance your performance on these jobs because it won't be something that will change. You don't have to switch from bi-weekly payroll to weekly back to bi-weekly. Is that I would recommend switching everything over to a weekly basis. It's a little bit more work up front, but then it becomes much more smoother going forward, especially if we're working on Davis-Bacon projects. Where do I account for travel time? A great question. Unfortunately, the answer is we already know what the 4 legal uses of fringe are, and travel time was not one of them. So you would not account for travel time when filing certified payroll. Travel time would be at the expense of the owner if they want to pay out the operating account. You cannot use fringe dollars to pay for travel time. Which box should be checked for fringes? We addressed box A and B depending on if you're using cash or if you're using benefits for the majority of the fringe dollars. So we've answered that one. We use 1099 employees. How does that work? It's tricky. It's absolutely allowed. We can definitely have 1099 employees on the job, but unfortunately, because they're 1099 and outside of our payroll world, we would have to pay them 100% of the fringe in cash. So that you would not be able to take credit for any of those fringe dollars. So you would incur that additional 30% labor burden for all of your 1099 employees. So you can utilize 1099, but unfortunately, we cannot take credit for the fringe. You'd be to be compliant, you would need to pay out the full base and fringe to those 1099 employees. A few more questions. We pay our employees for their cell phone bill. Is that a fringe benefit? Well, we stressed on travel time. So I'm hoping everyone in the audience gathered that the answer to that question is no. Company truck, cell phone, logoed shirts, barbecues, any of those things that an employer might do for the benefit of their employees, unfortunately does not fall under a use of fringe dollars. So that would not qualify to be a benefit that you can take credit for under the Davis-Bacon Act. Last one, all my employees are salaried. How do I enter their information into the certified payroll? Let's go back to when we were looking at that earlier example of the breaking out the fringe and saving that $6 in labor burden. If you recall, we talked about doing 50% prevailing wage work, and that came out to 1,040 hours. So let's say 1 full year for a salaried employee. It's quite simple. Take their base salary, divide it by 2,080 hours, and bam, you've got their hourly rate. If their hourly rate is above the wage determination sheet, you're good to go. Just pay them that hourly rate, or pay them their salaries as, and mark that hourly rate in the certified payroll. If for some reason when you do that calculation, their salary puts them below the prevailing wage, you'll need to increase the dollar amount. So let's say their salary puts them at $30 and the prevailing wage sheet shows $35. You'd need to bump up their hourly rate by $5 an hour. So simply take their salary, divide by 2,080. If we're good to go and it beats or exceeds the prevailing wage rate, we're good to go. If not, we need to add incrementally until we meet that Davis-Bacon wage determination sheet. With that, I will leave you with one thing here is that we offer through Sikich and Beneco is that all ABC Indiana Kentucky members will receive $500 off the setup cost of a prevailing wage retirement plan with Beneco. Just so you know, typically that cost for anyone outside of ABC and the few other associations that we're members of is $1,500. So it's a pretty substantial savings for everybody at ABC, and we do that because of our partnership with all of you and appreciate everything that you're doing out there for the contractor industry. So with that, I'd like to say thank you, and then I will bring Marie back on and see if we have any questions out there, Marie, that I can address or anything that came in through the chat bar.
For the, I'm not sure how much of that you heard because I may not have been unmuted, but thank you for everything. It was really good information. While we're waiting for the questions to come in, can you tell us why right now is a good time to be doing the prevailing wage work?
Sure, absolutely. It's a great question. What we've typically seen at Beneco, unfortunately, after recessions, which we were in March, as you know, March, April, I think we're really kind of starting to get out of the recession now. It's just still going to be a long recovery. What we tend to see about 12 to 18 months out from the beginning of a recession is that a lot of the private work tends to dry up, and that the federal projects and the state funded projects tend to become a bigger part of people's business. One example of that, and it hits all too hard here at home for us, is my significant other is in the hospitality industry. As we all know, hospitality has been hit dramatically hard by the crisis that we've been in over the last 6 months. But a little known fact, we had the biggest build out of new hotels in the United States over the past 2 years. So I'm sure most of you that have traveled have noticed that. It seems like everywhere you go, there's a new Hampton Inn, a new Holiday Inn. They were all popping up, new Marriotts, new Hiltons everywhere. I would think it's safe to say I can't imagine there'll be a huge construction boom in hospitality over the next couple of years. So businesses that were thriving based on those types of private jobs will be looking for other areas and other ways to keep their employees working. What we tend to see is about 12 to 18 months out, as that work dries up, that the federal government and the federal jobs become more and more prominent. For those that were winning those prevailing wage jobs, bidding full price because they didn't have a lot of competition because of the lack of labor out there, we'll start to see some competition. So getting yourself positioned for success with good bona fide benefits and utilizing the Fringe properly today can set you up for success middle of 2021 going forward. The other key there is we've been hearing for the last, gosh, I feel like 3, 4, 5 years now of this $1 trillion plus infrastructure bill that's going to come. One of these days, I truly believe we will see something that will come that will be there similar to that. And for those that are set up and have their business models ready to win that business, will be quite successful. So I think there's no better time than now to get your businesses set up properly for success. Specifically in the current environment, is I know balance sheets have been tightened dramatically and operating budgets have been shrinking. So again, we want to make sure we have as much money available. So by properly utilizing that Fringe, we can free up potentially, as we saw in those examples, hundreds of thousands of dollars of operating expenses to kind of get us through some of those leaner times. So there's no time now, better than now, Marie, to really utilize those Fringe dollars and get the proper programs put into place.
Okay, so we have one question. Do we have to offer a company match?
Great question, and you do not. So as I mentioned before, the contributions that come from a prevailing wage Fringe 401k contribution are employer contributions. So it is already employer dollars going into the plan. There's 2 keys there. One, that would be basically a match if it was a regular employee contribution. But in this case, it's all employer contribution. So it is employer money by the rules of the Davis-Bacon Act going into the 401k. The other key aspect of that is for the home office staff and the highly compensated at the firm. We do have to pass testing for the 401ks. And one of the keys is the ownership cannot have more than 60% of the balance of the 401k, at the end of any plan year. And what I've seen in a lot of companies that do not offer a 401k or do not use their Fringe dollars, unfortunately, a lot of the employees tend to opt out of the 401k, and the ownership wants to make the biggest contributions they can possibly. So if we have all of our field employees maybe putting in 10, 15, 20 grand, and we have 4 highly compensated that don't want to max out their 19.5, they're going to put in 80,000 to the 10. That unfortunately is going to not pass testing. So there's a huge incentive to get those employer contributions in through the fringe dollars. But a long-winded answer to your question, Marie, and I appreciate it. Thank you for asking, but you do not need to offer a company match. That's 100% at the employer's discretion.
So if we were looking to start a plan in January, when would I start looking?
Sure, no, another great question. Thank you for asking. There's no time better than now. I always say, typically give yourself 2 to 3 months to get a plan up and running, just to run through the plan design questionnaires, make sure that we're ready to go and set up for success. Is give yourself a 2 to 3 month window. We're running here into mid-September, so if we're looking to get something in place by January 1, I would recommend end of this month, beginning of October is where we really start kind of putting the pen to the paper and looking at the different options that are available to you.
Okay, and we have one other question that came up. Does Beneco have the ability to help at bid time with labor?
Can you read that one more time?
Does Beneco have the ability to help at bid time with the labor?
Sure, no, absolutely. I mean,
the labor cost.
Yep, absolutely. I mean, sure, we can absolutely run through those scenarios with you. Again, most cases, the wage determination sheet's going to tell you what the base wage is for that particular job. As far as the hours that it's going to take to complete the job, again, we leave that to the discretion of the contractor. But we can definitely help you with the wage determination sheet and what dollar amount. Again, that being said, I can run you through the examples, but it's going to be, again, the discretion of the owners or whoever's writing out the bid to say, where are we within our competition, right? The one thing Beneco doesn't want to do is have you underbid or overbid and look back and say, well, okay, well, sorry, that was on us. So there is a lot of leeway. What we can do is show you what your rate or what your bid cost per hour would be using benefits, whether it's 100% go the fringe going away, 50% of the fringe, 25% of the fringe. We can break down what that hourly rate would look like differently so that it can give you a better indication on, once you figure out the hours of labor for that particular job, which number you want to use in your bid. So we can help in that regard. At the end of the day, though, we leave it to the discretion of the contractors for their final bid and where they want to put in their final numbers.
Okay. One of the things in looking at putting together your plan, there is the new thing that's called the Secure Act, which actually gives a tax credit. So it may be, if you're considering doing this kind of work, now is a perfect time to talk to Todd and I. We can go through and talk about the tax credit. It is up to $5,000 for the first 3 years, depending on how many employees you have, and it only takes 20 to get that tax credit. You can see that Todd's giving a $500 discount right now, and then also we have an additional, if you do an automatic enrollment part of your plan feature, you get an additional $500 tax credit. So if you are considering this, it's a perfect time to take a look at it. If you have a plan and you have questions, please call Todd or I, or email us and let us know what your question is. We can look at your plan and your specifics and walk through. One of the things I find is that people, will have an advisor or a group that works with them. But if they're not specialized in this area, and as you can see, Beneco is specialized, sometimes I find that people will be doing things that aren't the most beneficial for all of the dollars and the bottom line. So it doesn't hurt to take a second look and have somebody kind of just evaluate and say, hey, everything you're doing, yep, it's right in line. But let's make sure that what you are trying to achieve is what you are achieving with your plan. We are getting to the end here. It looks like I don't think we have any more questions. So with that, if you want to jump on, the handouts are still there. If you want to look over and get any information there. As I said, you have Todd and my information. It's on the screen right now. So we look forward to helping you and hearing from you. And we want to thank you again for taking time out of your day and joining this, and hope that it was beneficial. With that, we said thank you.
Thank you, everybody. Appreciate you taking the time. Have a great rest of the day.